Today, we're going to talk about a technology that was literally born from a global crisis. It's an idea that really challenges the very foundations of our entire financial system. So let's get into it. This is an explainer on Bitcoin and why it just might matter a whole lot more than you think.
Okay, let me just start by asking you a question. What if money, our money, could exist and move around without ever having to go through a bank?
And let's push that idea a little bit further. What if you didn't need a government's approval, or really anyone's permission, just to use your own money?
Now, what if that exact system was born from the ashes of the 2008 financial crash? And what if it offered a totally new way for all of us to store our wealth? Well, this isn't just some hypothetical thought experiment. This is the entire premise of Bitcoin. To really get Bitcoin, you have to go back to where it all started. And its origin story? Well, it begins with a massive, global crisis of trust.
There's a direct line you can draw here. See, in 2008, the global financial system came incredibly close to collapsing, and trust in the big institutions that run everything, it was just shattered. Then, just 1 year later, in 2009, Bitcoin shows up. And that was no coincidence. It was a direct response. The whole idea was to replace our need to trust people and institutions with something totally different. A system that runs on pure math, on code that anyone can check, and on a network of users spread all across the world. So, you're probably wondering, how on earth does a system like this, a trustless system, actually work? Well, it all comes down to a really groundbreaking piece of technology. At the very heart of Bitcoin is something called the blockchain. The easiest way to think about it is like a giant public book of accounts. But here's the key. Instead of one bank holding that book, the ledger is copied and shared across thousands and thousands of computers. That's what makes it so incredibly secure and transparent. And here's how a transaction works, in a nutshell. First, you start a transaction. It gets broadcast out to this global network. Then, computers on the network check it to make sure it's legit, they bundle it into a block, and then they permanently add that block to the chain. It's a really simple but incredibly powerful process. And because there's no single person, no company, and no government that controls this ledger, that means nobody can step in and block your transaction. Nobody can freeze your funds. This right here is what people mean when they say Bitcoin is censorship resistant.
Now, this decentralization is huge, for sure, but it's only one part of the story. You might be asking, well, what gives Bitcoin its value? And that brings us to one of its most famous and most important properties.
21 million. That's it. That is the total number of Bitcoin that will ever exist. It's not a policy, it's not a guideline, it is hard-coded directly into the system.
Now, think about that. This creates a huge contrast with traditional government money, right? Which can basically be printed in unlimited amounts. And over time, all that printing can devalue the currency. It makes your money worth less. Bitcoin, with its fixed supply, literally cannot be inflated away. Its scarcity is absolute.
And that program's scarcity, that's exactly why you hear people call Bitcoin digital gold. In a world where saving money in a bank account can sometimes feel like a losing game, Bitcoin comes along and presents itself as a different way to preserve your wealth over the long haul.
This digital gold idea, this absolute scarcity, it actually leads to another revolutionary concept, the ability for anyone to achieve true financial sovereignty.
I mean, just think about the difference here. To open a traditional bank account, you need permission. Your account can be frozen for any number of reasons. And at the end of the day, a third party is controlling your money. With a Bitcoin wallet, it's the complete opposite. It's permissionless, no one can freeze it, and you, and only you, are in control. This is the whole concept of being your own bank. Through something called cryptography, you hold what are known as private keys to your funds. There are zero intermediaries between you and your money. That's a level of direct ownership that's just never been possible before on a global scale. So, okay, it's a powerful idea, no doubt. But is it just a fascinating experiment, or is Bitcoin actually here for the long haul? You see, unlike a dollar that's backed by a government, Bitcoin's value comes from its network. It's backed by the collective belief of millions of users, its growing adoption all over the world, and the mind-boggling amount of computing power that secures the network every single second of every day. And that belief, it is growing. We are way beyond just the early adopters now. We're talking major financial institutions, huge publicly traded companies, and even entire countries. They're all starting to integrate Bitcoin into their plans.
You know, there's this fascinating idea called the Lindy Effect. It basically says that for things that don't have a natural expiration date, like ideas or technologies, the longer they've already survived, the longer you can expect them to last into the future. It's like a book that's been in print for 100 years is probably going to be in print for another 100.
And this is exactly why the Lindy Effect feels so relevant to Bitcoin. For more than a decade now, it has survived huge market crashes, it's survived government bans, it's survived constant criticism from, well, pretty much every corner of the financial world. And yet, here it is. The network just keeps on running, and it's stronger than ever.
So look, Bitcoin has already changed the conversation around money, freedom, and technology forever. So the question isn't just